Big picture question, it's an important one. How commodity intensive is this reopening going to be in China?
Well, that is actually the big question. I sense that right now it's very sentiment driven. The idea of China reopening is definitely going to lead to a lot of pent-up demand, just like it did when the US and Europe opened up after COVID. But in terms of actual manufacturing intensity, which requires a huge amounts of commodity imports, I feel like China's commodity imports are still pretty good. I mean, their stock levels are really quite high right now. So I think right now it's potentially the copper rally is running ahead of itself in anticipation of more to come. But I think we just have to be a little bit patient on that.
So when you hear Jeff Curry of Goldman say 11,500 this year, you're pushing back?
I think short term, I think we might have run ahead of ourselves. But I do agree that copper fundamentals are tight. Inventories are still pretty slim. The supply side still looks like there's a huge amount of capex that still is required. But I don't think we're at crunch time right now. But I think right now it's very sentiment driven. I understand it's all thing China.
When you look at the marginal dollar increase of China GDP, has it become more or less commodity intensive over the last decade or so? Is that something that's declined?
Yes. I think China's reopening is significant, but it's going to be a different China. The structural changes that we're seeing in China, I mean, we've been talking a lot about the population decline, the fact that the property sector is no longer as hot as it was before, the manufacturing is slowed down, there's no longer that big impulse and push, you know, to go back to your point about intensity of consumption of copper. I just don't think it's going to be as strong as the 2010 rebound, for example.